I want to talk about sell in May and go away. We were mentioning this last month, and we said that it was better to buy in May and make money today. Well, it turned out May was the best month, the best May on record since 1990. So we killed it right there. All right. So what about the month of June? Because, May's gone. I can't bring it back and do it again. June looks like it's going to start out as a bumpy ride, but I see trends and I see seasonals and I see opportunities heading into this summer, and I want to start off with those. So entering today, the first trading day of June, we see the S&P a little sluggish today. We've got some news out. I was looking at all the news. There's just tons of it. Most of it's coming out of Russia and Ukraine. Most of it's coming out of the Middle East. We got peace talks that are possibly going to go through. And then, of course, we see some domestic terror attacks that happened over the weekend, most notably in Boulder, Colorado. But you've got that, and then you've got some other things that are headwinds coming into the first week of June here for the S&P. I've taken the S&P and I put it on a weekly chart for you. I want to break it down into three areas. And this is based on going back into 2023. The lows that happened before the election, well before the election, it was coming out of the bear market. Then we had the election in 2024. We had the top in January 2025. It's interesting. We had a bull run that ran from October of 2023 to January 2025. And we got rid of more than half of that in the matter of about 6 weeks. So think about that for a moment. October 2023 to January 2025, 15 months. Half of that got eclipsed in 6 weeks. Well, guess what? We've taken most of that back. And we're on the precipice of hitting all-time highs. There's a possibility that our seasonal summer could lead to all-time highs by July 4th. We could stall out here. I don't think that's going to happen. I think we could get a combination of new all-time highs into July. Then we could get a little of a stall out heading into the fall, and then possibly getting a big move higher heading into the end of the year, right? Or we could just pull back to the 500K mark if some of the things that we don't see in patterns could come about. Let's talk about a few of those. I mean, the bond market's one of them. Bonds just stubborn right now. TLTs have been stubborn, hitting these lows, possibly moving us into new higher yields that we haven't seen. Gosh, we haven't seen higher yields in quite some time, but this is a longer term trend of TLT where we've just been seeing lower highs and lower lows, coming all the way into this area, bouncing down here in the low 80s, then bouncing in the low 80s again, and a third time in the low 80s. But yet these highs keep getting lower and lower. That's a traditional bear trap or bull trap, if you want to call it that, to possibly move to lower lows. Now, the one thing that's helping us out here is that the numbers that are coming in, numbers are coming in not as strong as expected. But we get a couple of stronger numbers, then we possibly could see this happen, and then those rate cuts are going to be off the table. That's the one thing that's kind of holding the markets right now. Look at crude oil. And this is nothing new. I've been showing this. This is literally been now 23, 24, and now into 25, where we've seen crude oil going neither higher nor lower. We've seen neither a bullish trend or a bearish trend. We're looking for seasonals in the oil market. They worked out well in 2023. They worked out well in 2024. They're not working out this year, and part of that's because of the Trump agenda. But we're stuck in this 20-point wide trading range for USO and crude oil. Take a look at gold. Gold, and I haven't really changed my tune here on gold, definitely coming off of all-time highs. GLD at 320 up here. This is an entire area where we're just seeing that run up where traders, a lot of smart trade money is going into hard assets. It's going into things like gold. It's going into digital assets like Bitcoin. But if we were to see a retracement, we'd have to come back down to around 260 before I'd start to see any add-ons for bullish opportunities. 225 before the whole thing flips itself. And then we've got that October 2023 low down here at 170. But gold has definitely been on the minds of many investors, and rightfully so. I mean, just to go from 170 to 320, that's nearly, we're talking about nearly a double. We get above 320 to 340, and that will be a double off those October 2023 lows. Now, something I'm going to be talking about this Thursday night that I want you to put aside. If you got something going on Thursday night, cancel it. You're going to want to come and join me Thursday, June 5th at 8 p.m. because I'm going to talk about U.S. holidays. And, we just came out of Memorial Day. This was last year's Memorial Day. And we saw a rise out of that since then. But typically what happens in U.S. holidays is people like those 1 week trades. They like to buy, a week before the holidays and then sell right before the holiday. And while decades of research have shown that to be a typically bullish result, the last 10 years have been very mixed. In fact, if you look at last year, Memorial Day did not work. July 4th, that 5 days or that 4 or 5 days prior did work. Labor Day absolutely didn't work. And so you got mixed results just even last year. But what I've done is I have looked at all of this data and I've slid it back and forth and looked at what about more than 5 days? What about 2 weeks? What about 3 weeks, 4 weeks? What about layering these on top of each other? And I have done that homework. And I want to just show you what happens between Memorial Day and July 4th, going back, 10 years. And I'm looking at that period in between. 7 out of 10 years, we see higher highs. We see the fact that it's typically seen that 5% move up. But when you factor in these 3 years it went lower, we got about a 2.3% return on investment. But I like the fact that when it's right, we're getting more than a 2-to-1 on this being right. I like the fact that it's 70% or higher. And I'm talking about the SPY, folks, not individual stocks, but the SPY. Now, this is just a small piece of some of the information I'm going to be talking about on June 5th at 8 p.m. Register now. The link is in the description below. All right. The link is in the chat. The link is in the description below. Check that link. You're going to want to register for this. You have to register for this event to get the full information. I'm going to be talking about Memorial Day to July 4th. I'm going to be talking about July 4th into Labor Day. We're going to talk about the 4 holiday patterns, 3 of which I follow. 1 doesn't have enough data right now. I'm going to talk about 3 stocks that I found during the summertime, looking at these holiday patterns. 3 stocks, 100% historical accuracy, last 10 years, what we're doing with these, how you can follow me in these, and more. Again, June 5th, 8 p.m. Register now. Links are on the description right now. All right. So that is, in essence, everything I have talked about here for the markets. And in conclusion, I call it partly sunny for the overall markets. Trends and seasonals suggest the market can continue higher. And I see that. And I like the trends and I love the seasonals right now. But if you want to look at potential risks, because nothing's 100%, the bond market's a potential risk. We get continued strength. That's going to really kind of cut back on quantitative easement. It's going to cut back on potential rate cuts. And then there's those surprises that are coming from Eastern Europe. And then there's those surprises coming from the Middle East. So to me, no news is good news for the markets this summer. And that's what you look at when you're wrapping everything together.